Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex market analysis for the week of March 8th through the 12th, 2021. Before we get into that, we wanted to show you our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. All right, without further ado, let us go to our live action screen here where we have the Forex-Trading-Unlocked.com website pulled up. Now, we already have a workstation page made up already. We took the charts. We have them ready. We have the dollar index, which ended the week with a higher move high. Now, the question is how strong is the dollar now? Is the dollar a confirmed bull, or are we peaking and stretching this corrective move to the upside with the dollar index? Well, this is something that is, depending on the currency cross you're talking about, that will be the issue. When it comes to the majority of currencies, the dollar is very strong. However, there are currencies that the dollar is not strong against. There is a commodity-driven trade in all currency markets right now. The oil market, for sure, is driving this trade, and also so is the 30-year interest rate trade. So this is very important for your Forex traders out there. This is the base of our analysis, not just for the week, but moving forward for the next couple of months, because we do have divergence in currencies around the globe. So the Euro US dollar, which is the number one component of the dollar index, is making new remove lows and has confirmed its bearish trend again on Friday. So we made a lower move low after a lower move high. This is a significant high. This now sets our downward sloping resistance line that is holding this corrective move intact. That is because we're saying corrective still, because on a yearly and monthly basis, this market is just neutralizing, not necessarily becoming a bear. On the daily and weekly basis and hourly basis, of course, this market is in a free fall. There's many extenuating circumstances that are causing this. In fact, why don't we pull up another chart from Forex-Trading-Unlocked.com. We're going to go to the Market Analysis and Education tab, hit the Workstation tab, and we'll toggle down here. We're going to get rid of that, see how fast you can clean this up. All right, let's look at the XAU-USD. Why are we looking at gold? Well, this is actually one of the factors that's driving the currency market. So you can see that the gold market set a newer move low, settled positive on the day on Friday, but that doesn't mean anything because it's still hanging off of its lows. This is going to impact the currency trades as well. And we'll get more into that as we get to the yen and a couple other currencies. So the Euro US dollar right now, we are looking to make a test of this $1.1885 level here. If we take out this level and sustain a trade below it, well then I think we have a good chance at making our way down towards the 17.5, maybe 17 even area over the course of this week. I don't see us having a monster sell-off in the Euro US dollar. Now, what would precipitate a big slide, and this is something that you really need to watch out for, because this is the indicator that will help keep you on the right side of the dollar, no matter what cross you're looking at. If the 30-year Treasury bond futures continue to make new lows Monday, Tuesday, and Wednesday, they've been basically going down by a full basis handle, which is a dollar move in the bonds, which is huge, every day for the past month. Are they going to stop now? Well, with the stimulus thing maybe coming through, and we know we have a Fed meeting coming up, but what's the Fed going to do? They're just going to buy more government securities. But there's a flight to quality thing that is happening now, and when it comes to flight to quality, we know that when it comes to currencies, there's the US dollar, the Japanese yen, and the Swiss franc. the yen and the Swiss are collapsing against the dollar right now. With the 30-year bond going down at the rate that it is, usually the 30-year bond is a flight to quality mechanism. Since no one is buying treasury bonds, that means they're buying dollars. So as bearish as many people are on the dollar, you're going to have to be careful with that as long as flight to quality is going into that. So our extended targets here will be around 17.5 to 17 even for the euro US dollar as we progress into this week, especially if we have a continuation of the trend in oil to the upside. Like, we could see $70 oil before the week is over. And I mean, we're going to 100. I don't care what anybody says. So I've been calling that since December, ever since we knew that Biden was going to be inaugurated in January, confirming one of the only things that he ran on, which is destroying the oil industry. So, and as he keeps on hammering that, well, oil is going to go up and the dollar is going to gain versus certain currencies, except for one of these, the British pound US dollar. Here's one where the oil trade is definitely holding up this market. Friday, we made a lower move low in this market as well. We took out a key target, and we settled just above it at $1.3828, and that will $1.3830 was a settlement, but $1.3828 was our downside extended target. This one, as long as oil remains in a aggressive bull market, it's going to be hard for the British pound to sell off versus the dollar very much. I think we may have seen the end excuse me, of this correction. So we can remove this line right here. It's no longer as valid. And then we're going to use this arrow here for pretty much below this trend line, upward sloping support line. And then this key area here, $1.3564. I don't see the pound getting down to this area unless you see a big sell-off in oil and even a big rally in the 30-year treasury bonds. Without such a thing happening, I don't see how it's going to happen that you'll be able to manifest a rally down to this area. However, what we can do is we can go to our NinjaTrader platform here, and we will go to our euro once again. Remember, we had our downside targets and projections. So for the euro, we had met our upside. And let's get rid of these here. These no longer hold up. Okay, so on our NinjaTrader platform, which you can download this also from our website, forex-trading-unlocked.com, right at the bottom of the home page, or even if you go up to one of the nav bars here. If you go up to the nav bar up here under Tools, you can hit this for NinjaTrader platform, and that will bring you right to it. And then there's also on our home page at the bottom of the page. All right, so we're looking at the pound and the euro, trying to figure out what's going on. So let's look at our euro US dollar projection here. So we did have a sell signal here, this bearish engulfing line. So we're going to do a little risk reward target from the close of that and the high of that move. Okay. So remember, I said $1.17.5. So on the NinjaTrader platform with our risk reward formula, putting this in from this sell signal here, we've made a lower move low over the past couple sessions in the euro. $1.1724 is probably where you can get to see that market get down to. Now let's go to the British pound US dollar that we're talking about. All right, remember we had that key level. So if we use this sell signal here that we had, which is a bearish engulfing line, high probable Japanese candlestick pattern, this sell signal here goes down to about $1.3535 on the extreme. Remember, on the when we were looking at the other chart, we've already hit the shorter term daily and hourly targets. This is an extended downside target for a corrective move. Like I said, because of the oil trade, I do not see this one manifesting. I just think it's going to be way too hard to see the British pound get all the way down to $1.3535. But if you want to have a downside target, that is the place to go. So $1.3535 on for the British pound. So that would also be just below this pivot point here with this, which would also mean a lower move low, excuse me, after a higher move high, which would have this market in neutral, not a bear. So the worst thing I could see happening as far as the pound becoming weak versus the dollar is that not that it becomes a bear market, but that we establish a range trade for the British pound US dollar, which may happen especially once we do get closer to that $100 a barrel threshold. I think $100 a barrel beyond that is going to be very rough, because once we hit $100, it's going to put a brake on the economy in the United States. That will be not good for our recovery that we are trying to work on right now in this country. So these things will be key to watch out for. So we have our two targets now. We have the British pound, and we also have the euro. We have a downside target of $1.1724. I think really $1.17.5 is really about as far as you're going to see that before you get a decent bounce in the euro. But you never know. So we'll see. We still have a little bit more trading to have to come ahead of us, so we can look at that. All right, now you want to talk about a trade that is like a balloon underwater, huh? So this market just continues to press higher move highs. The U.S. dollar Swiss is a bull. So now, am I saying this is going to go make a run for parity? Absolutely not. I think that you're going to start to run into resistance where it's going to be hard to accelerate this trend to the upside. I wouldn't doubt that we see a nice little turn. But here's the problem is, since Brexit is over, now we are in post-Brexit, it is up to Switzerland and Germany to bail out the EU and deal with all of their ills. So without having the UK helping to pad that cost, it's going to make the Swiss a little bit weaker versus the dollar and many other currencies as well. One of the main reasons is that the pound is very strong versus all currencies right now. So it's not just that the pound is I'm bullish because of oil. I'm bullish the pound because the pound is bullish versus most currencies right now. So you don't want to ever try and pick a top or a bottom. That trend is in place. This one, however, was a long-term bear, has neutralized, and now has become a short-term bull for sure. So let's see, go to our Ninja Trader platform here and see what we can figure out with some numbers here. Okay, so what do we have here? As far as targeting wise, let's go. We got this. All right. So for our US dollar Swiss here with our Ninja Trader platform, let's go again and get our risk reward calculation here. So we're going to take this first short term high, and we're going to go off of this short term or major low here, swing low. And you're going to see that we have already, there we go. On Thursday, we had already blown through that extended target. So I think now we could keep on trending higher and higher and higher and exploding. But if you look at the velocity of this rally, it's very, very steep. Markets tend to go out like they come in. So if we have such a steep momentum, eventually we're going to have a very sharp sell-off. I think with anything, we're most likely going to have something like we had here back at the beginning of February. And this happened to be a high probable Japanese candlestick pattern as well. So which gave this little correction here. We then turned around, set a higher move low, and then boom, we really started to accelerate this trend. Notice that this is actually as the dollar started to turn, and this would be because of the interest rates and also the price of oil. That's the other thing too, is remember, the UK has the oil, the EU does not. So, and neither does Switzerland. So, I mean, you've got to remember, Switzerland is basically an island inside a continent. So, I mean, it's not surrounded by water, but you know what I mean. It's a tiny country that is surrounded by the rest of the EU around all of its borders. So, as far as upside targets for the Swiss, we're going to have to see how it opens up over the week. But here, or on Monday rather, or Sunday night rather, and see how oil starts to trade too. If you see oil rallying another $1 or $2 a barrel, which it's very likely, I'm telling you, we could see $70 a barrel oil before the week is out. And if that is the case, I would think you're going to see an acceleration of this trend, but not like it was over the past few days. I think you would get through this high that we set on Friday and probably hit around the 93.5 to 93.70 level. So that's what we're looking at for the Swiss. Now here's another flight to quality currency for Asia is the US dollar yen. This thing blew. We had an upside target of 107.5 with 108.5 being the longer term target that we figured it would probably take some time into this upcoming week or the following week to get up to that 108.5 area. Well, the last 2 days of the trading week of last week definitely changed that momentum. This also is very accelerated. The price of oil is slapping the yen right now as well, and the fact that we are no longer an exporter in the U.S., that hurts competition, which means pricing also will be higher. It also means as far as delivery costs with a lot of the shutdowns of things that we're doing in the U.S., now the cost of transportation of oil is going up as well. So if that means that right there, not only is oil going up because of things that are being done in the U.S., there's other factors now that as far as just on delivery basis of crude oil alone is putting a floor in oil. So right now you have probably anywhere between a $25 and $35 floor in oil, which if we went back to that level, that would be great, but that's just for transportation's costs. That's not even production costs. So now you're looking at, with everything that's been imposed, that you probably have a floor in oil of around somewhere between $30 and $40 a barrel. So that means we're never going back to low prices of oil again in this country. It's just not happening. Not unless we go back to drilling and becoming an exporter again. So that's just the fact, and we have to deal with it now. There's nothing you can change. You're not going to change the administration for another 3 years. So this is what the trend we're going to have to ride and pay attention to. This is also why the 30-year Treasury bond is collapsing at the same point. Now remember, interest rates are a function that drives currency pricing. So while that market is tanking, we'll wait on the Fed meeting. Unemployment came out pretty decent on Friday. I'm not too optimistic about the next unemployments coming over April, May, June, July, and August. I'm expecting it to be flattening and not going down. I hope I'm wrong. I truly do. However, if it's just flattening and not even going up, that also does not bode well for many currencies, and especially for the dollar. It will become a very big issue. So we're going to see a lot of swings. And as far as the U.S. dollar yen here right now, once again, we've hit our upside targets. We have to wait and see about how the oil market reacts. If the oil market comes back even just a couple bucks, I would think that you're going to see a sell-off. Like, it would be healthy to have a correction like we've had here. I think your baseline is going to be probably, most likely for this market right now, anything above 106.65. So you got about $1.50 of corrective potential here. And then I think then we would either see a sideways neutralizing trade develop, especially if we can see some stability in oil and maybe where it sets a range instead of just keeps on rallying. In fact, just to show you guys this stuff, when you're on our website, if you go to markets and you go to futures, since we're talking about the Treasury bonds so much, you can go down to the US 30-year bond market and get rid of that ad, and then we have a chart that's already dedicated to this. So if you look at this free fall, this is the weekly chart. And here's the daily chart. This is just insane. On Friday, even though it settled higher, but it planted a newer move low. I mean, this chart is just, I've been trading the 30-year Treasury bonds for 30 years. I've never seen a free fall trend like this without any central bank action, without any major geopolitical events going on. This is just a free fall. I mean, the low on Friday was $1.5527. We started the month of February up at $1.69. That's over a $10 move in the Treasury bond futures market without any central bank action, and it's going against the curve. So this just does not happen, but it does when you have gold collapsing like it is right here. And then since we're on this oil kick here, We go to our markets here. You go to commodities on our navigation bar, and if you do that, you can pull up all kinds of commodities. And if you go under the energies part, you go to crude oil. Now the futures are always in delay. Now look at this. Crude oil settled at 66.09 on Friday. This bounce is just sick. And if you look at the forward curve, the way this is bending here, it's not going to stop right now. This trend is here to go, or here to stay. And I have to say, like, the ability for us to hit $70 a barrel within just the next couple days is very likely. I mean, I just saw even gas at the pumps and at a couple of stations around us jump 40 cents over the weekend. That's just because of what happened in the last 2 days in the oil markets. So gas prices are going up. If you're not ready for $5 a gallon oil per gas prices, well, you're going to get a lot of sticker shock, and it's going to happen a lot sooner than later. This is happening faster than when we had the issues with during the early 2000s in the Bush era, when we had the invasion of Iraq and stuff like that going on. And then you had a reason for oil prices to go high. We were producing, and we had a war going on in the Middle East. There's no war going on in the Middle East right now. In fact, we've had peace there for the past year and a half, basically. That's probably going to rise too. Once that happens, then that would definitely skyrocket oil up above $100 mark. So we're hitting 70 soon, folks. And if that happens and we continue to go higher, then 109 to 110 would be our target for the US dollar yen. So then we are looking to challenge this area up here. So now here's the funny thing is, if you look at this, we go all the way down. We've been trending lower, lower, lower. We broke out to the upside this year, and the fact is that we're coming off of a higher move low. We set this low back in March of 2020 when the markets collapsed. Okay. Since then, this market went all the way up by its highs and then tanked. Now I think we're coming back to where we were, not necessarily pre-pandemic, but yeah, kind of. Pretty much where we were in 2019, and the only thing is now we have two different variables that were not in place. We did not have skyrocketing 30-year Treasury bond rates. We did not have skyrocketing oil. These two factors alone are going to have the yen at 110, maybe even 111 by the end of May. That's what I'm saying, folks. There's definitely a ride to be here, but there are going to be probably some major swings here. All right, let's go to the Australian dollar, US dollar. Oh, and you know what? Before we leave the yen, let's go back and on our Ninja Trader chart, if you want to know, as far as like we said, our extensions to the upside is now looking at 109 to 110 area. As far as if we hit a correction, see, we already off of this major bottom here in our first initial swing high, we hit through the target on Friday of 108.03. Okay. So as far as a correction, I think if we do fall back somewhere around this 105.60 area to 104.90 area, that would be these two lines right here. This would be the support base of any corrective move back to the downside. The only way that I see that even possibly happening would be if oil all of a sudden was to have a big sell-off and get back to like $60 a barrel. Even actually lower than $60 a barrel. I do not see that happening. All right, Australian dollar, US dollar. Okay, let's get it back on the daily here. All right, we had a sell signal, another bearish engulfing line sell signal in this market the other day, and we made lower move lows also on Friday, settling lower on the day. Oil is helping to prop up this market as well, but the strain of the interest rates is also hurting it. I think that if anything, this is kind of like the pound. You can expect it to maybe waddle around support a little bit, but unless there's a big sell-off in oil, I would not expect this to stay in a negative direction. This isn't a bull market, has been for months and weeks on end. I do believe that this market will continue to trend higher. We are coming off a higher move high. That's where this bearish engulfing line sell signal was. We've already hit the intraday targets to the downside. So let's look at our Ninja Trader here. Let's pull up this chart here. So we have our bearish engulfing line here. So let's look at our risk reward trade here on this one. If we take the close of this day and we use the high of this day, that helps us set our level. All right. There we go. Okay, so right around 76.10, 76.09. A little bit lower than where we hit on Friday. So do we need to hit that target? No, we pretty much have already been there. Like I said, with our other normal targets, we already hit through that already at the beginning of the trading day on Friday when we made this lower move low. Because this low is here, we made a lower move high, boom, we came through this and made a lower move low. So short-term trend, obviously lower move lows, lower move highs, bearish. Did we set a bottom on Friday? I don't know, but I'll tell you what. You see how this market dipped down so hard and then settled basically above the midpoint of its range? That is a bullish sign in the short run for the Australian dollar, US dollar. One of the main reasons it did this is because oil opened up and just continued to rally strongly on Friday. That propped up the Australian dollar, US dollar, just like it slowed down the British pound, US dollar trade. So for our downside target, if we were to fall back on support, we're looking just to take out this low by a little bit and then probably look to find a bottom, unless we have a sell-off in oil. A sell-off in oil would change everything. Now, as far as the New Zealand dollar, US dollar, this one is pretty much trading in tandem with the Aussie. We had a dark cloud cover, high probable Japanese candlestick pattern sell signal a couple weeks ago. This one also has already hit through its targets. It did make a lower move low on Friday, settling just above it. This also is reflectionary of the oil trade. I think that what you're seeing is the establishment of a range for the New Zealand dollar, US dollar. The oil trade is going to help to prop up the New Zealand dollar, US dollar, but not as much as it will for the Australian dollar, US dollar. So I would say that most likely we would probably set a short-term low. Remember that this would be a higher move high with a lower move low. This sets us up for a neutral trade with the New Zealand dollar, US dollar. Now let's go to the US dollar Mexican peso. The US dollar Mexican peso, this thing just continues to blast through new highs. It was critical, this $21.05 pesos. Sustained trading above here has us aimed at this. We had 21.5 as our target. It is very likely now, if the trend continues, and I think we're going to see a little sell-off first. I think you're going to have a chance to buy this again before we make a run for new highs. And I believe that probably 22 pesos is probably going to be about where you're going to run into a big wall as far as the rally here. This market is obviously a bull for the first quarter of 2021. Is it a corrective move? Well, it's already established that it's more than a corrective move, but I don't think that the trend here is bullish enough to sustain any major upside potential with the US dollar Mexican peso, meaning that I think 22 pesos to a dollar would be the extreme as we head into spring break season. And then after that, I think we'll establish a range somewhere between somewhere around 21.5 pesos down to 20 pesos to a dollar. I do not see us coming back below this 1989 level for quite some time, especially with the commodity trades the way it is. US dollar Canada now. We had a bullish engulfing line buy signal. We capped out within one day, within 2 trading sessions. We planted this lower move low and then a lower move high. Friday, we tried to pierce this $1.27.5 area. We failed to do so. That is because of the oil trade. You can see how it was running. Dollar was weak. Dollar was strong against these currencies. This oil trade is stronger. So I would key off of, the short run, we've already hit our target. We did it in 2 days with this one. That was a moonshot. Remember, it's a counter trend trade in a very aggressive bearish market. If you want to use our risk reward technique here from the Ninja Trader platform, take that close and that low, and we'll move this out here. And we have $1.2875. This is key because we have this high near here as well. Should we get up to here and take out that high, that would put us on the neutral campaign. I would not get overly bullish on this market. I think you have a lot of sideways action to potentially much lower action because of the price of oil. And also tenuous relationships between the United States and Canada seem to be developing. How this is unfolding, I just am shocked. But for some reason, the current U.S. administration is not acting, playing nice with the Canadians, and that doesn't bode well for the U.S. dollar Canada currency cross relationship either. So we'll see how that manifests. Right now, we're coming off that lower move low, and we've made a lower move high. We need to take out this high from a week and a half ago. If we do, that's a totally different story. Then we'll at least be setting up and establishing a wider neutral range trade. So U.S. dollar Canada is definitely, like I said, and if you look at the crude oil futures, that is what's driving it. The pound, the Aussie, the Canada, because of this rally in the U.S. in the treasury, it's not the treasury bond, excuse me, crude oil. This is helping to keep those currencies as bulls against the dollar. The same thing is because of the 30-year futures market. Now, I think because of unemployment, that's why we got this little bounce, but we made a lower move low on Friday. So don't be overzealous saying, oh, the interest rates are going to turn now, and all of a sudden the dollar is going to be a big bear, and all the currencies are going to slam the dollar. I think that you may see a correction. We definitely are. We've hit our targets, so we have to see how things go. But when you have a runaway trend, like you have in the 30-year treasury bonds, in crude oil, that is what establishes runaway trends in other markets like we see here in this US dollar JPY trade. Okay, so I think this should be making sense and clear as far as why we're using these other markets as an indicator. I always say if you want to know what the market's doing, look at the markets. The best indicators out there are the markets. So the gold market's telling us what to do. And remember, the gold market, the 30-year treasury bond, those are part of the ebb and flow cycle of the markets themselves. They go up, they go down, they go in different waves, and there's usually a lag between one and the other, and then as they finish their cycle, is what it is, okay, that it impacts the cycle of dollars and currencies. It also impacts the cycle of equities, meaning the stock indexes and the broader stock market. All these markets are impacted by both these commodity and also these financial commodity trends. So, and just like we have here with the British pound, US dollar, like we looked at, how this one, the oil trade, is definitely in play, so we did in the short run make a lower move low after a lower move high, but this was all done in a very short amount of time, and that's where I think that if it's very short to establish all these things to confirm a downtrend, then I think you'll see the reversal happen just as quickly. And that's why we're watching these things like oil and interest rates, and we'll keep on watching them as the course of this week unfolds, and we'll see how that will, develop. I have to say that unless there's some major change in the administration in the United States, and that's not happening for 3 years, this oil trade is going to dominate the currency market for the next few probably years. I don't know how fast we'll get to $100 a barrel oil, but we are on that train. And once we get to those levels, then you'll probably start to see more divergence once again in the currencies. But in the short run, you have to figure out this is the valuations, this is what's going on. And once we get to those areas, then we can start to take those off the table. But since we don't have to talk about Brexit anymore, even post-Brexit now, it doesn't even get much airing. So the oil trade is what we're watching for the currencies. And if you are new to this kind of, it's not a theory, this is how things work, start watching it and you'll see. So, and we will get back to more of that over the course of the week. We're going to wait and see how the markets open up tonight. The Euro US dollar will be the one that we are really keying off, watching this one as they open up. So we're going to watch the yen when they start this evening, and then also the euro in the early morning, and then we'll know what's going on. All right, so since we don't have any questions, just a couple comments in our chats, then we are going to just remind you about one last thing, and that is to check out that book, High Probable Japanese Candlestick Patterns, available on Amazon.com in both paperback and Kindle versions. If you do so, then you can learn how to trade those Japanese candlestick patterns and incorporate them into your own trading. Remember to go to Forex-Trading-Unlocked.com for your Forex needs and information. And we got plenty of tools and products out there that you can help to increase your odds in your trading. So I want to thank you very much for your time today. And this is Teddy Keckstedt from Forex Trading Unlocked. Have